Welcome back to Three Towers Investing Channel, where you can get the latest in finance, investment, and innovation. You may be wondering how you can grow your small savings in your bank, but I'm telling you, having it sit in a bank will get your money nowhere. If you're asking what you should do, then this video is for you. Stay tuned till the end of this video and you'll be surprised how easy to grow your money by doing the things that we'll show you today. You will be amazed at how much it can earn you if you have, say, $10,000. And how will that happen? Dividends. In the United States, individuals in their late 20s typically have around $10,000 saved for retirement. You could be surprised at how much $10,000 will pay in dividends alone, even if it might not be enough to fund a conventional retirement. It can be sufficient to augment your income or cover travel expenses. Consider that many scenarios that might generate a range of income. This might assist you in estimating the amount of money you'll need to ensure your financial future. There are a few investment options with various dividend income amounts. The most well-liked investment is probably the S&P 500 index. It is well-liked because it provides investors access to 500 big American companies with a history of consistency and success. Additionally, it is well-balanced, meaning you will get regular dividend payments and own a share of each sector and industry that makes up the stock market as a whole. The S&P 500 has a lengthy history of producing positive returns, and Warren Buffett highly recommends it. A dividend yield of less than 0.5% is what you'll earn if you invest in an index fund that tracks the S&P 500. This is due to the fact that a large portion of the top holdings is technology firms, which are infamous for paying little or no dividends. Given that you have $10,000, your annual income will be $150 or around $12.50 each month. The Dow Jones Industrial Average, sometimes known as the Dow, is another well-liked investment. Investors typically use this index to refer to the market. It consists of 30 of the largest U.S. firms and is seen as a secondary indicator of how the U.S. economy is doing. If you invest in a fund that closely resembles the Dow, you can receive a dividend that is somewhat higher than the S&P 500 at a little over 1.5%. Investing in a fund with an income-oriented strategy, as opposed to one that prioritizes capital growth, is another option to raise your dividend yield. Other excellent choices exist, such as the Invesco S&P 500 High Dividend Low Volatility ETF, which gives a dividend yield of over 4%, which is much greater than the overall S&P 500. This ETF holds the securities of reputable firms with a long history of dividend payments. It exclusively retains the top dividend-paying companies out of all the S&P 500 companies, which dramatically reduces long-term growth. Your yearly dividend income will be close to $400 if you put $10,000 in this fund, or around $33 each month. There are several other high-dividend funds available that are appropriate for older investors. This is because these funds perform better in bad markets and worse in bull markets since they are more steady. It's no surprise that they are well liked by seniors when you consider their steadiness and reliable income. Investing in sectors or funds tailored to certain industries is another way to raise average rewards. Such a fund only makes investments in one particular area or business, such as energy, real estate, healthcare, etc. Due to the nature of their businesses, certain sectors pay more dividends than others, such as the energy sector, which is valued at a cheap price and has a high dividend yield. Renewable alternatives and regulations, like the Vanguard Energy ETF, offer a dividend yield of above 3% since many investors are wary of the volatility brought on by cyclical changes in the economy. Due to their nature, real estate investment trusts are also seen as slightly hazardous due to the fact that the bulk of their revenue is distributed as dividends to shareholders. The energy sector is competitively priced and delivers a high dividend yield since so many investors are afraid of the volatility brought on by economic fluctuations. For instance, the dividend yield on the Vanguard Energy ETF is higher than 3%. Due to its organizational structure, real estate investment trusts are also viewed as slightly risky because the majority of their profits are given to shareholders in the form of dividends. Investors who are willing to conduct some study and buy businesses that are out of style have the chance to make enormous profits. The sector's gain will come in the form of dividends and capital growth as they recover popularity. With your $10,000 investment, you will make around $25 each month and $300 per year. Although you might buy individual stocks, many financial gurus advise index funds or exchange-traded funds if you're a beginner investor with a small portfolio. Without taking on excessive risk, you may gain knowledge about market behavior, receive consistent returns, and expand your portfolio. Think of aristocratic dividends too, because each aristocrat has a history of increasing its dividend for 25 years in a row. It's a wonderful place to start. ABV provides a yield of 4.5% at the moment and is a dividend aristocrat. Dividends on a $10,000 investment in this company would amount to about $450 a year or $37 a month, plus any capital growth or decline due to future market volatility. Individual stocks regularly lose value due to recent adverse news, missed earnings, or a management change. This can provide a chance because the stock market frequently overreacts. A shrewd investor will weigh the importance of such news and make their own determinations about the stock price. If you have $10,000, you are roughly a few years away from retirement. Therefore, you should seriously consider disregarding dividends altogether. How come this is the case? In the long run, investing in growth stocks might result in substantially higher returns. Due to the historically lower total returns of dividend-paying investments, those who are still young should normally pursue growth. Over the course of a lifetime, a 2% change in your yearly rate of return might have a significant effect. Consider this again. If you invested $10,000 when you were 25 and earned an 8% return until you were 65, you would have $217,500. By the time they reach 65, they would have $450,000, or more than twice as much money if they receive a return of 10%. Growth firms may be volatile, which can be challenging for investors who aren't familiar with market ebbs and flows. For younger investors, an ETF like Vanguard's Growth ETF is a great option. It invests in large-cap growing companies like Apple, Amazon, Home Depot, and other well-known names, as the name would imply. For someone with many years before income is needed, a growth index will unquestionably outperform the S&P 500 over the long run. Since the bulk of its shares pay little to no dividends and instead choose to reinvest profits back into the company, VUG's dividend yield is less than 0.5%. Due to the low dividend yield, an investment of $10,000 would only return less than $50 in dividends per year, or around $4 per month. This portfolio has some excellent options that have consistently beaten the market. People typically pick the incorrect investments for their time horizons because they are fixated on dividend yield. Generally speaking, a $10,000 portfolio would be better off concentrating on growth and completely ignoring dividends. What alterations to your life might additional money bring about? That amounts to an extra $50 a year or $400. That amount is probably not enough to cover your daily expenses and other necessities. Growth stocks will give you more money as you prepare for retirement. I hope you learned something from our video today. If you do, it would be kind of you if you can share this video with others to inspire them. Thank you for watching. To get more life-changing videos like this, don't forget to subscribe and click that notification bell. We are 3 Towers Investing Channel.